Hello investors, in today's video we will cover the SoFi 8.65 billion deals under the SPAC deal. So this is a little bit different how, and the ticker is for this SPAC is IPOE. And I will cover in this one, I'll cover, okay, what is SoFi is, its management, what are these risks, other investors, who has also invested in this SoFi deals, and then behind the management behind the SPAC or IPOE, right, and its valuation. So we have pretty big agenda. So these SPACs are not through the regular channel IPOs. So this is the fintech company, as you can see. Majorly, pretty much they're trying to disrupt the banking industry, and they have started with the student loans, but now pretty much they have pretty broad range of products. For example, the key centric idea is the member centric approach, which their products they claim as per it's a fastest way to do everything. If you want to borrow and open account, buy and sell stocks, these are all without any it's just via app. So the infrastructure cost upfront is reduced a lot, right? So that's the key. Then they have a broad range of selection of a product, right? And they're coming up with CUNY new ideas. They're also saying their content to help members via SoFi and non-SoFi brand, right? SoFi brand, right? The credit score and all. And easy use anywhere for sure is the app. So believe it not, I believe in not near, but maybe a decade. And so the banks are moving towards the app, and we'll see less and less brick and mortar stores. It's not coming, but the industry has been already been disrupted, and we can see now SoFi has been started that. So as you can see, this is just the only company providing this one app. So within the this one app, you're in the phone, you can do most of your shopping as per the convenience, right? So pretty much providing the digital platform on that. So the key thing is here, okay, now what are the risks, right? So there are many risks, but just focusing from the business perspective to understand the business, they're trying to target the people or the customers who has high income and high FICO scores. This is not like only the good income, but at the same time they want to who has a highest score. So this means this has a highest credibility as well, not just the age group who earn the income, but they spend a lot of money in unnecessary stuff and has low FICO, right, and bad credit. So this way they not only get advantage from the no brick and mortar, they save a lot of costs there, but and in the key they're attracting only the good cream talent. So that's I think the key. So that's why I have included this slide here, right? And there are some other couple points which you can write, but I think this is the key here, the point here. And they have a broad range of products, right? So, and the good thing is within the 24 months they have launched so many things, right? So the money, relay, invest, home loans, features, in-school loans, credit card. You see time to market is within the quarter, right? And the some SoFi reward card as well. So it's pretty much fast in terms of the relationships, right? And yes, SoFi home timeline, right? So this is from the January 2019. See how it's rollout. Members centric approach, power entire financial relationships in cross buy opportunity, right? So it's all in one app here. Now the in the management, right? So we don't have much financial data to look into it, but the one thing is the key here is, as Mr. Charlie Munger or Warren Buffett mentioned in the Warriors books as written on them, right? Or Mr. Peter Phillips, that the management is a key, right? So if you have a good management, even if the business doesn't do well, they can take it to the forefront. Think from the Tesla perspective, right? The strong Elon Musk, right? He take the very good idea, but exponential scale disrupt into the energy sector. Before nobody was thinking, but he created the whole industry. Anyway, the same thing applies. If the management is good and has good creditability. It's say a lot. So the CEO, has experience in Twitter, NFL, and Goldman Sachs. So it's a pretty big name. Same thing with CFO, Mr. Chris, is Uber and Goldman Sachs. Seems like the business lead is also coming from Goldman Sachs. From their credit card division, Amazon, another good name, and founder and CEO of Gallia, right? So a couple of good names here. So that's what is good. Another from the chief risk officer is coming from Citi and Toyota, right? And the head of people is from Tesla. So the pretty big brand names. They have a good experience if collectively from the management perspective. So that's from the total. But now what's coming to the risk? If you see from the risk is pretty much this is all in the air, because this is the SPAC is not through is pretty not, they don't have much history as we can look into, but they have making the projections, right, that they will make, okay, after 2025 they will be making 3.5669 in and net a billion in the net revenue, right? And the EBITDA is around 1.17 billion, and year over years grow. And if you look in here, is a dip here in the expected earning of 2020, which is expected, and then it's increased here. So this provides the opportunity, these SPACs, right, to invest in the company's very early stage through the through this through this, right? And their dependency, another risk is here is dependent on the SPAC management, right? Because now we depend upon this SPAC management to do their due diligence to ensure the company is right and it's doing proper. Because there are many frauds as well, like or it comes out through in the past, right? But we need to see from the history as well, and through for sure these are not through the regular IPO route where we have the big investment bank who work and with this company and take to the public route channel. Here pretty much SPAC is just like a blank check. You gave the money and they go and find the good opportunity, and you assume that opportunity, they did the good due diligence in the SPAC, and then they have invested. Good thing about this is at least we know, okay, that this SPAC is, which is IPOE, that they're going to invest in this fintech business. So the chances are less, but at least from the financial perspective, I haven't seen much positive cash flow or good. It's all that they're going to disrupt, and if there may be more risk, but I just want to bring the key highlighted ones here. And now if I go to the valuation perspective, so this is again, this is how this deal is coming through. So pretty much the deal is that IPO, the share price initially when it's launched is for $10, right? And they will issue like 865 million. So pretty much 8.65 billion dollars, right, to value this company. But how this money will be raised, right? So assuming that, okay, that cash coming from T Rao investments will be 370 million, right? Cash will generated from this is under 805 million, right? And then some co-investments. There are other people as other investors, not only just the coming through this SPAC or coming from the Jamaat, right, who is invested in this company. So I'll show you who other investors are. But if I just see from this valuation perspective, look at this, is quite very expensive. This is 21.3 based on the 2014 expected net incomes, or 13.6 based on 2025 expected net earning, right? So 13 times after 5 years of DP, that you can see here. And if you can see from the Yahoo Finance, if you pull this the ticker, you can easily see once it was in the news, there was a lot of craze in the market, right? The stock price jumps from around $10-11 to immediately to $18-20, 22, and then now it comes to 20, so almost like 75, or it's pretty much almost going to be almost double, right? So it's pretty high. So if you think from this perspective, even this is pretty expensive stocks, but yeah. So how this the will be shared it out? So pretty much the IPO, this SPAC shareholder will get 9.3% of the share of the company, right? Divided into that, and then the PIPE co-investment will get 14.2 shares, and then IPOE sponsor will get 2.3, which is Jamaat in this case, right? So that's how this company, which will be formed, SoFi, after this, the whole money is get raised, and then they buy this private company to make it public. This is how the ownership will be divided, right? And then yeah. So if I see from the this, who are the other co-investment, this is coming from the Business Wire. So the transaction is expected to deliver 2.4 billion gross proceeds from the combined company, including the contribution up to 805, which we have seen in the earlier slide, from the cash held in SEH Trust. So pretty much this in the SEH Trust from its IPO, right, in October 2020. The combination is further supported by a 1.2 billion, so at $10 per share, led by Chamath, founder and CEO, and head Sophia, with commitment from the funds by, you'll see these names, right? The commitment from the funds are from BlackRock. These are big names: Altimeters, Barron's Capital, Durable Capital Partner, Healthcare, Ontario Pension Plan is also investing. So that is pretty big if Ontario Pension Plan has the trust in that, right? So that's, I think, is pretty big. And then you also see this name, right? Also receive previous funds from these advice. So we see this one, and these all combinations. If I go back here, so this will be $1.2 billion coming from here, right? So that, and yeah, you see this 1.2 billion. So these many investors together, they investing these, and then 805 coming from the Shamat, and then rest. So this is all the money, right? Okay, so now the management behind this this SPAC. Yes, this is Chamath, right, who was a former Facebook executive, and the first he did in the past the Virgin Atlantic, which is the SPAC 1, and now is trading under the ticker SPCE. He did other in the Open Door and Clover Health. So he has a pretty good history and behind it. So, and we see from the other big name in the, so seems like the risk is less, but still is depend upon each personal opinion, and this is just for the opinion, not like I don't own any on these stocks. And yeah, just sharing this with you as well. So let me know what you think about this. If you like this video, or you want to buy this stock, do comment in the comment section, and if you're new, feel free to subscribe, and definitely like this video. This way more and more people will get benefit of it. Okay, so thank you for watching, and bye for now.